Hello everyone and welcome back to my channel. This is Eddie George and I'm trying to bring to you some knowledge probably that you don't have it, or if you have it maybe it's better just to watch it. And I don't want to bore you too much about psychology of in trading. All you have to do is just to uh, proper select your risk that you're willing, basically the amount of money that you're willing to lose in a trade with potential that you can gain. So let's go straight into the content. So first of all, I wanted to talk to you about how to draw the levels, the support and resistance levels, which is basically the first step that you can do in trading. So a lot of people they just draw some random lines in the chart, thinking that that's the support, that's the resistance, that's the support, that's the resistance, and so long, so on. Okay, we can draw another one here. Yeah, basically. Well, this is not what how I do the stuff. So first of all, you have to analyze or to decide for yourself: are you a day trader, or you're looking for a or as a scalper, or you're looking to do more like swing trades? Swing trades meaning like you look waiting for a lower level, and you don't care if the price drops like 5, 10, 15% because you're expecting higher level, or like in being in this situation here, you enter a short, and as soon as the price, let's say you enter here, but the price goes against you, it's not like you're getting out for a position because look, the market goes down, so basically uh, you miss the opportunities. So that thing you have to decide on yourself. Um, First of all, if you want to just analyze the chart, I'm looking right now on the weekly level. Of course, I can look on the monthly level, that it's even different than the weekly level. And you can find different forms of support or resistance. So because we're on the monthly level, let's do from the higher time frame. Always you have to remember, when you analyze a chart, you have to find out what direction is the trend from the higher time level possible. So here each candle represents a month. I think you know that. So basically we looking on the BTC, Bitcoin, USDT, on KuCoin exchange. I just picked this one because it's a clean chart, and it's easier to draw and to analyze the chart. So here we have the price action, which is the most important thing, and this is the volume. Uh, it's actually, if you know how to read the price action and the volume, you don't need any other indicators. Maybe you need just to confirm or to look for confluences. But basically, price action is the king. So how you draw the support or the resistance? So basically, I'm going on to this side here. On the second level, if I double click, I have all these um, tools that I can use. So I choose the one that is horizontal line, because the support and the resistance, they go uh, between the price actions. So here is the price action, yeah, higher and lower, and this is the time, the duration of the time. So first that you gotta see here, this is kind of like a strong level of resistance. Let's say the trend was going up here, it retraced it, the candle opened here, it went higher, but then it goes down and it's closing at this level here. So basically this one, it's a strong level on resistance. As you can see, the price, after it's retracing and is going higher, it kind of puncture through the level that it's mentioned here, but it doesn't close it. This wicks, meaning like the price action is just go over there, but the selling pressure is too strong, so that it's pushing the prices down. Okay, so I'm not gonna go too much into detail on this one because this is the last. This happened a long time before. It's still in consideration in case if the market drops, that you will have a nice, strong support here, and probably if the price goes down, it will probably bounce. It's gonna probably try to aim higher. Okay, So let's move to the weekly level where we have more price action. And as you can see, each candle is 1 week, so we have more candles into this chart. So we'll take the same tool and we're looking, always look to the left meaning the past, because the price, it's based whatever happened in the past, it can happen in the future. So you can see at this level here, and I'm using also this tool that is called a magnet, which is very good because you can click on you can move your mouse on a candle and it's already choosing the level that it's perfect at the closing or the beginning. As you can see, it's kind of moving all over. So I'll draw this first level here, and you can see going towards the present time, you have some activity here that you have before or after. Yeah. Okay, so this is one level of support, because we don't have anything higher here. For the next level of support, you got to look towards this side. So you take another horizontal line, and you can see here this is another strong level of resistance slash support. It was resistance here for 4 consecutive weeks. It punches through, it comes back a little bit, and then it's going higher. Then another level will probably be here. Now you can ask, why do you keep so many lines? Because the more lines you have, the more support and resistance you have. And that's how I like to analyze, to have an idea if the price retraces, where can go, how low can go. So I'm not freaking out if I'm in a position. Like if the trend, if the price goes against me, I'm out from the position, you know, taking a small loss, no problem, and I came back next day and trying to recover whatever I lost and make the extra. So this is another level of support slash resistance, because you have all kind of activity for the last 2 months, starting February 15th to May. It's like 3 months almost, man. The price activity that is being around this level. I will show you to you why this level is so important for the moment. So because we do have this as a strong level of resistance at the moment, let's find where is the support on the weekly basis. So you can argue that this is the one, but I really don't like it because it has price action here. It touches this one and it goes through the middle of this one. So what I will do, I'll try to move this one here, which it's more plausible to me. You might ask why. Because the price hits here as a resistance, comes down, form a support, goes up, comes back down, brace it, goes back up and continues, and when it comes down it goes through it and you find a local support. Okay, and then it goes higher. Now let's move to the weekly. Of course you can do this stuff with weekly, 3 days, 5 days, whatever. I like to go with monthly, weekly, and then go through the day. For the day level, I will take the same level, the same tool, but I will try to change the color so it's easier for you to see and for everybody. So I'll choose yellow. So I know the weekly levels, they're marching red. Now the daily levels, they're marked with yellow. Okay, so on the daily level, let's see here, which is also the weekly level, you can see the price is closing right at the level that we draw it on the weekly, and then it's moving continuously here. So you can say that even right now, this is the candle that we are right now, we kind of hit the level of resistance, the weekly level of resistance. Actually, this one here is pretty good for a daily level. Why? Because the prices navigates to this level, and then you can see it hits all these candles without too much problem. Now you might ask, what is this tool here? This is a very important tool. Most of the professionals, they use this. This is called VPVR. It's volume profile, time profile V, I really don't know, but it's the range. So all the price action that you have in this area, it shows you exactly like most of the volume. This red line that it comes set up over there and it gives you the level 54,721. It shows you the highest node of activity that has been during this period of time. The more you move this level, the VPVR might change, or uh, the red level, it might change. Like if I go to 8 hours, should work. So it should change from one level to another one. I don't know what's wrong with the trading with the platform that I'm using. It's very lagging these days. But again, we can work with whatever we have. So going back to, I'll go back to the VPVR later. And let's see what other level of support slash resistance we have on the daily. So another level that I will probably look where I see high activity. Do we have this one? Yes, you can argue that that's a one, but I really don't like it. The activity here, first of all, it's closing basis. So if I draw this one, closing basis here is touching. You have some sort of an activity here with closing and opening candles around the same level. Here is just touching, touching, touching. Here you have probably another level of support turn into a resistance. Here the same is navigating. We can leave that one over there. Another level. I kind of like this level, and you might ask why. Because if I put my level here, look at the price action. It's touching here. It's puncturing these levels here. Here is closing and opening at the same level. Here it's a little bit higher and lower. So basically this area here, it's a very strong support for this level. Here becomes resistance. Here also in the beginning was resistance. Resistance turns down, goes up. It's just playing over there for a period of time. Goes up, so it breaks the resistance. Turns down, forms the support, goes up, comes down, gets through it, bounces, come back again. It becomes as a resistance, goes down. The buyers, they buy it here. Market makers pushing the price higher, goes through it like it was nothing, comes back down. It retests the level as a support, and it goes higher. So support and resistance are very important. Okay, now that we have these three levels of daily, the price range I would consider, then you have another two of the weekly. Now you can go on the lower period of time. So let's say you are in the middle right now. I like to trade the ranges. Ranges for me, they're very profitable. I know for a lot of traders they're boring, but for me, um, because the market doesn't go all the way higher like that. I mean, like, look at this. If it goes higher like that, you're out of the range, and you can wait forever for the price to come down. So it's either you're going long or short. You're short, you're killed. You go long and you expect the price to go higher, you make money. You know, that's why they say uh, most of most of the new traders, they make money in the bull market or when the trend goes higher, but they don't know how to manage when it's in the range, or that's when they lose a lot of money, or when the prices retrace because they don't have the patience, and again they lose a lot of money. So um, now you need to understand that most of the time, like you can see in these levels here, this is a range. Imagine you don't want to trade this, okay, but that means there are a lot of people making good money here, also losing a lot of money. But if you want to wait for the trend to go higher, I mean, look, you wait probably like a year and a half, 2 years maybe, until the trend goes higher. So you need to learn how to do the range, how to trade the range, and how to find the levels so you can trade even in the middle of the range. So let's mark this as a range, and the range, if you want to mark it, you can mark it with a parallel channel that you find it here, also on the um, toolbox. Take the parallel channel, so let's say you draw it from here to here, and you go down to here, yeah? So this activity that is happening here, that's called the range, yeah? And of course, you can find a lot of levels here, and how the price ranges from lower to high, from high to low, from mid-range probably, thinking that it's going to go higher, and you know you get killed, the price retraces. Market will not do what you want. Market is going to do his own course, and you just have to play with the market. Whatever the market gives to you, that's what you got to do. All right, so now that we established this range on the 8 hours, you can go to 4 hours and try to see. Basically, the range is going to be the same. So, market makers meaning the people with a lot of money. I'm talking like $100 million to play this market. They will they will drive you nuts, because let's say when the price comes here, you say, okay, this is the lower level of the range. Why is it not going higher or higher? And you know, because they're not ready, they want to take the money first from you. So let's say you enter along here, the price goes up, you're too greedy and you don't take profits, or you don't put your stop loss, the price retraces, and then you retrace it even lower than your entry, and actually you're liquidating, losing your funds and the possible profit that you were making. So you have to be very, very quick. You have to be very agile. And as soon as you see green on your side, meaning like you're positive, you're making money, that you have to at least to take some money out from the table, set up your stop loss probably at the entry. That's what I like to do. And from that moment, you're just riding a winning trade. You have nothing to, you don't lose anything. So the market makers, they will not buy at this level. No way. What they will do, they will wait. Or they will short this level here. They start building their short position, pushing the market down. When everybody's it's losing the patience, and they're thinking like, I need to make money, I need to make money. If the market goes down, I'm going to start to enter in a short position. Most of the retail traders, they will start opening shorts here, while the smart money, the market makers, they will take the profit from their trade and reverse it to a long position, taking the liquidity that is built here around this level and diverging, creating a divergence between the retail and the investors, pushing the prices higher, and basically taking the money, free money, it's free money for them, taking the money from the retail investors, from people who are too late for the party, let's put it this way. You might ask, why I didn't draw the channel lower here? Well, because I have no level here. I have no level of history. I have no level of support. So that's why I draw it here. Yeah? And if I draw it here, how would you call this? This is an exceptions of the market. You will find them all the time. So you find them here, you find them here, you find them here. Yeah, and a little bit here. So this is the range. There will be moments when the price goes through the channel and comes back in. So these are deviations. So nothing is perfect. Even in trading, nothing is perfect. Overall, it is perfect. But I'll explain to you why this is called a deviation, because the price has to retrace to a level that it was supported before, and probably over there you have like a Fibonacci level that it was supported. And other words, there were no more sellers here, and the buyer steps in. Okay, so market makers, they buy here, they sell here. Probably do you think they're gonna buy here? I don't think so. They just sell here, wait, the price goes here, they push more money in the market to short it, and look what they do. They take the money from the retails. So basically they trade in this range. This is the range, buy, sell. Sell more here, buy here, push the prices higher. they start taking profits all the way. Here probably, if they decide, they will start piling shorts, building their shorts, even if the price goes here, if they want to push the prices down. So you have to be in a mind of a market maker. Even if you don't trade with a lot of money, you have to think as a market maker. Doesn't matter if you have $1 million. If you don't know when to trade and how to trade, you will lose that money. Doesn't matter if it's $1 or $1 million. If you don't have the patience and if you don't have the knowledge, you will lose the money. As you can see here, I have no indicators. I have no EMA, SMAs, 51, 50, 200. They're good, but to me, for my experience, they are all lagging indicators, meaning they follow the price action. They don't tell you what will happen. Price action, it's the most important thing in trading. Okay. So let's put the VPVR. This tool, you find it, if they let me. No, I can use it. You know, I'm going to turn it off because it's useless. We have another alternatives. So if you want to find the price range that you have it here, what you need to do, you go in your toolbox and you go second, third, fourth, fifth, sixth, seven. You double click and you have all these other tools here. You go to fix range volume profile. So you click this one and let's say you started from here where we established this range all the way to the present time. Doesn't want to show me either this one. I have no idea what is wrong with TradingView today. It really doesn't want. Okay. That's really frustrating. I really wanted to show you guys this stuff, but I don't know how to do it. So, let's work with what we have. If the volume profile doesn't work, fixed range doesn't work, which is also I like to call it point of control. Let's use the Fibonacci. So on the tool here, the toolbox, you find the third one. All these Fibonacci, there are a lot of them. Pitchfork, shift fork, gun box, there are a lot of them. So I like to use most of the time these two. So let's pick this one. Again, using the magnet, we establish here that we have this deviation. Okay, let's find, so we don't know what's happening in this area. We're in this position here or here. Yeah, let's say we're here. We missed this one. And we want to find out where the price can go. So you take the higher high from here and you drag it all the way down to this level. I mark these two levels with yellow because to me that's the most interesting point that I want to enter in a trade along with other confluences. So you can see here, this is the golden pocket. The price reverses it here and then it goes through. If you miss this entry here, you don't need to go in a long position because you're late for the party. Once it hits this 0.618, which is the golden level, I would say, that most of the algorithm in trading and also traders, they use it. So basically, it kind of guarantees that the price will have some activity here. So what you do, you either enter one order of short here, or you can pull like 3, 4, 5 orders of short. And then what you do, kind of zoom in, and you look where can be the resistance. So the resistance should be in this level here, if you look at it, because you have some activity here. Yeah. So basically, you put your orders here. Sorry, you put your orders here, and you put probably your stop loss a little higher than this level. So you go to choose this position. So you enter, let's say, at this level. This will be your stop loss. Yeah. or you can even go higher. Well, at this level you don't know this is the middle range because you don't have this history. And then you say where I am willing to take profit. First profit will be probably here. So you enter at this level and you will put it here. And you say, why should I take profit here if I'm entering at this level? Well, just because look at the activity that is being done here. So basically you wait, you wait, you wait. When the price reaches your level, you take profit. Put your stop loss at the entry after that. So basically you have a guaranteed winning trade. Yeah, if the price reverses, let's say you take 50% of your position open. Let's say you put $1,000. When the price is here reaches here, take $500 from the table, which is your profit, and then move your stop loss. If the price goes this way, you have guarantee one that profit made with the $500 that your position was originally. Excuse me. Okay, so let's move on. You are in the position here, and you enter a short, and the price goes high. And you might think, how high the price can go? Well, maybe you can find a level based on history. So what you do, you take the same tool, you mark it there, and you go to the lower level. Yeah? To the lower level. And then you can see the price goes higher. Yeah? So if you want to enter in a long trade here, because you're in the short and let's say you get out from this level here, you're expecting all the time the price after hitting the 0.618 and not stopping. This is another lesson that you need to learn. If the prices hits once the 0.618, 0.66 level, and then the second time it doesn't get rejected, meaning the price goes down, that definitely it's a good enter for a long, because the market will probably push higher. And why is that? Because most of the people who miss this entry here, they will pile their shorts here expecting for the price to go down, while the market makers, they know this, and then they will push the market higher, eliminating and liquidating pretty much everyone else, while they just made the profit. So what you need to understand from this point, once the price touches a level like we have it here, but the second time it just goes through it and comes back and retests it as a support, pretty sure this market is going to go high, because this was resistance, retrace, goes higher, past the resistance, comes back, turns the resistance level into a support, the market goes higher. And then it's happening the same thing. Okay. So we established this 618, 0.618, 0.660 is a very important level for trading. Okay, now let's move on. I'm really sad because I can't use the, I don't know why. I think it worked. This is a very important tool that you can use. Okay, so how do I use the fixed range? First of all, I'll use it by time. So let's move to 1 hour, and I will explain to you why. Because each candle is an hour, and what we will do, we will take a lot of these tools and put them all over the chart, so we find something that I call it money maker. Okay, first thing first, let's go to this level that it was February 10th at 0 UTC time, and we go all the way to 11 0 UTC time. Okay, so this represents the price range, the channel, if you can call it, that day uh, the market was having the activity. The red line here is the node, the most volume activity you had around this level, which is, if you look on the left, on the right, sorry, it's 45,151 around. Now, if I scroll in, you will see that there are more colors here. Okay, why these things are important? Because this is the most volume activity that the traders between buyers and sellers, they decide to have the activity. This one, I would call it the volume area high level. So basically, it means, in other words, besides this point, you have this point as a high node and this one as a low activity node. If I hide this stuff, and remember, this is from 0 to from 12 o'clock midnight to 12 o'clock midnight next day. If I hide it, you can see here you have no activity, just a little bit here. That's why the indicator shows to you this is the value area low where traders, they were interested. Yeah, this is the value area high where traders were interested in buying or selling. While this is kind of the medium range, but it doesn't have to be in the middle, can be here, depends where the most activity that it's happening during a trading session. Trading session is 24 hours in crypto. In other markets, it's like 6 hours, 7 hours, whatever. Okay, now let's move on to the next day. We go again from 12 o'clock midnight to the next day. Then let's have more fun, and we will draw more these ranges. Why? Because they are very important. Yeah, I'm not going to explain all the lines that I do. Yeah, I wanted to find a breakout so you can see it, how it's happening and why the prices, they go to that level. Let's take another one here. And one more before that, because we had the breakout over there. Alright, so we have this 1, 2, 3, 4, 5, 6, 7, 8, roughly more than a week, 7 days. I don't even know if this was Sunday or Saturday. It's still very important, but I'm not gonna bore you with that. You can do that while you're practicing and find these levels. So as you can see, the first day, open here, the price navigates it, it busts through it, comes back down, it goes through. And this is the end of the day. So let's say here you don't take any trade. Now you are in this position, you don't know what's happening here. You have just this past that you have. So first of all, uptrend. So the chances to go higher, they're much more than to go low. Now, would you like to enter at this level? I wouldn't do that because we're already pretty high. You have three options. Enter and gamble your money thinking the price can go higher. It's possible. Stay on the side and wait for the price action to tell you what's going to happen. Or third, chip in and enter in a short position. Now, while these levels are important, the point of control. So the day finished at this level, and you can see that the volume area node, it's around 43,700. The volume area, the value area low, it's 39,500. As you can see it, where the colors, they change, yeah? And this is the value area high. what I will do in this position, being in this situation here, when 12 o'clock or midnight starts, and I'm in front of the computer, midnight UTC, for your time probably is different, for me it's like 4 or 5 o'clock PM, I don't enter in a trade, I just wait. I have a strategy that I like to use that it's pretty good, but you have to be very, very focused on that. So I like to wait 2-3 hours in that region without taking a trade, just to see if the price goes towards my direction. So this is 12 o'clock, 1 o'clock, 2 o'clock, 3 o'clock. What I can see, looking towards the left, what happened the day before, if, and I say again, if the price in this day, today let's say, it's navigating higher than the value area node, that it's higher, not on this one, it's okay to enter a trade in a long position with the stop loss at the mid-range, I would consider it. So I'm not entering here, yeah, I just wait. If the price goes towards the higher level, I am too late for the party. I'm waiting for the price to retrace. And when the price to retrace, guess where is going? Is going, you're gonna think that I'm doing some kind of magic here. It's no magic, it's just simple trading which people don't know how to use it and they gamble their money. Okay? So, as you can see, the price, after waiting and not taking any trade, I don't mind. Probably I'm stuck 10 hours in front of the computer because I want to see what's happening. But you still have a lot of tools. You can set up alarms, you know. Just do your own research and try to learn how to do it properly, playing with the trading view. So what I'm doing here, I'm just showing you some simple strategies without using any indicator, without watching the news, without watching people talking on YouTube that the market is going to go up or down, up or down. Nobody knows, nobody has a crystal ball. So you just wait. Waiting is the name of the game. The price goes, and as I said, if the price hits this level here, and I see before that he had an acceptance, I'm okay to enter a trade with the stop loss lower than my entry, of course, probably somewhere into this range, because I can see here this is a support, so the price can go lower than that. So basically I set my stop loss below this wick level, below this candle wick level that you have it here. So if you go to a position that is long, entering at this level here, yeah, the price hits this level, you put your stop loss somewhere here. As I said, it's below this tiny wick level. And how high would you take it? Well, the perfect target for me is to hit the level that he hit it before. But I don't have guaranteed this one. Yeah? I mean, look, this is the best, the very good trade. The risk to reward is 5 to 9. 5.9, almost 6. So basically you put $1 and you win. You're willing to lose $1, that is the red one, but you have the possibility to gain $6. That's an amazing trade, if you ask me. Okay, so you enter this trade here. Do you have any confluence? Well, the first confluence you have it is because the price retraced to the value area high that it was in the previous day. Yesterday. Okay, people here probably they will go more in short, thinking that the price will go down and down and down because we're already too much up. And you have this candle formation here that it's called a sandwich. Sell candle, buy candle, bearish engulfing candle, meaning the candle is bigger than the candle before. Well, what do you know? Price goes higher. Where it goes? Let's see. Let's take the Fibonacci. We draw from the higher level to the lower level that was our entry. And you look to take profit on your trade when the price reaches the 0.618 level. Does it go there? Of course it goes. So you enter here, you take 50% out from here, from the position, and then you look for the next level, probably 786. Does it hit that one? Yes. So going back to analyzing the amazing trade that you would have, stop loss. It doesn't let me to do the stop loss the way I want. Let me take the magnet out. Stop loss. Right below this candle here. Target. All the way up. Take 50% on the 0.618. Take another 10-20% of the trade at the 7.86. Let the rest run. Move your stop loss at the entry. Yeah? The price goes down. Doesn't matter. You made the money. You didn't make all the money that you were expecting in the beginning, but you still don't lose a penny. You don't lose a penny. Okay. That's just one example. Yeah? The more activity, the more readings you have with this point of control, the easier it is for you to manage a trade. Okay? So I think I've been clarified with that. Yeah. So another rule that probably you wanna take a pen and paper and write these rules. I would say that I use them, and they protect me. First of all, wait for a trade. Let the trade comes to you. When you enter a trade, look left on the previous day. Where was the value area high or value area low? Because we're in the uptrend, meaning the price goes higher and higher, it's better to enter in a long position from the level that is being given to you. Okay, you just don't enter right away, you just wait. Yeah, so basically you made money on this level. Okay, now the price goes down. Yeah, maybe you want to enter a short position. Yeah, or you're thinking that the price is gonna go lower. Yeah, well, what you can do, always look on the left. This day it's over. Yeah, again, this is on the daily level, but if you go on the 15 minutes, you can do even more trade ranges with the sessions. I'm gonna probably do another video about that with the trade session that I use for the daily. Let's stick with the one that we have for this moment here. Okay, so we draw this price action for 7-8 days, God knows how long. Yeah, we had this level as a level of week. This is a level of the day, the support / resistance that we clarified looking on the daily candle. And right now we're on a 1 hour chart. Let's say you take some trades here, go up and down, up and down. This is the range. You make your parallel channel basically looking like this. Yeah, and this. Yeah, and let's talk about, you know what, I'm gonna delete this. What? Alright, guess I have some problem with the trading view. I'll catch you back in another video, sorry about that. I don't even know if it's working or not. Probably I'm gonna talk by myself at this level. I guess it's alright. Sometimes you play with what you have. Okay. I see the streaming is still recording. Okay. So, we were here. We took a long, didn't close it with the profit that we wanna, but we managed to make some money. Now another day comes. Well, when another day comes, you don't delete this price history, yeah? So you have the range from February 8th, the range from February 9th. And now we open the 10th. We don't know what's happening. We don't know this history, yeah? We play with whatever we have here. Now the price on the February 10th, it opened where? Below the level. There is very volume area low. Yeah? So if it's opening here, the chances are to going higher or lower. For me, again, I wait 1, 2, 3 hours. If the price of this candle, let me remove this so it's easier to see for you. If the price here in the first 2, 3 hours, it gets acceptance below or in the middle, for me, it's now worth it to enter into a long position. I am waiting for the shorts. Okay? So, what you do, you just wait. 12 o'clock was here, yeah? The price goes down. It goes a little higher. It hits this level that it was previously as a point of control, yeah? People probably trading shorts. So they're going to a short position, yeah? When the price goes to this level here, what you can do, you just enter in a long position. Why? Because you're pretty low to this level, yeah? So if you draw an horizontal line, you're almost hitting the support. If you take a Fibonacci from low to high, pretty much you see that it's hitting the golden area that I like to call it, 618, and you can go to a long position, yeah? Profit first will be taken when the price reaches this level. Second level of profit will be when it reaches this level. So as you can see, pretty much you enter on the 0.618 Fibonacci retracement from this level to this level, comes through here, go to a long position, take profit 1 will be at the point of control from the previous day. Then the second profit will be the volume area node high, that it's here, as you can see, yeah? Most of the people, they will expect more, probably you too. The price retraces it, you look at the candle formation, pretty much self-explanatory if you know how to read the candles. There is a dragonfly doji indicating a reversal, okay? So, if you see this stuff here, pretty much you can enter in a short position on the next candle with the stop loss above this one, knowing that prices to go higher over there, they're not that strong because it got rejected from the volume area high node, okay? So the price goes down. Look what happened. How low did it go? Why did it go right there, you might ask? Well, let's look left. You look left without me telling you something. Do you see this activity here? Do you see this activity here? Did it happen? Well, most of the retail traders, they don't look at this. They don't look at this. Well, the big traders, they look at this. So what they do, they enter in a position here, they set their take profit on this level, and if you look, the price goes there, it bounces up, it doesn't pass this level, so here they're still building shorts. And which level it goes down? The point of control that it was 2 days before. It's not magic. There is not magic, it's just patience. Okay? There is just patience. I can talk about this all day long, but I don't want to bore you. If you have any comments, any questions, let me know. And this is a sample about how to trade just based on the price action, which should be #1 lesson in trading. Understanding patterns, understanding price action, candle formation, point of control, Fibonacci levels, support and resistance, it's primary in trading. Okay. Uh, for the day trading, which I'm not really good at it, I use like 4 sessions: London, Asia, New York, and the close session. But for this purpose, I think you can learn by yourself by practicing with virtual money. You don't have to put your money, just get experience with this one, and maybe you will understand how to read the charts properly. Let's move to our just for a few minutes to look what's happening right now. As we can see, we decided they're still in a channel. Yeah, this was the deviation, this was deviation, this was a deviation here. This is the channel that we are right now. Okay, if I put the VPVR, I hope it works right now. No, it doesn't want to work. Well, okay, thank you, VPVR. Let's take the fixed range. Now it doesn't want to work, this one. Very nice. Just wanted to do like a quick look at what's happening at the moment right now, but if it's not working, there is nothing that I can do. Well, when you trade in a channel like this, pretty much you can see the middle line is probably the area that it has like more the point of control should be there. Man, it really doesn't want to let me use it. Nope. Alright, so what do we have now? Resistance locally here, which is the weekly level, weekly resistance, daily resistance higher. Let's look at some Fibonacci. I traded this stuff yesterday, so it was very profitable for me. Yeah, so basically, while everybody was looking to short at this level, probably they got liquidated because the price went higher. Why it then went higher? Because I think I had no, it doesn't let me. I had a volume area and a point of control here that it was touching. So basically, I entered the short almost at the level of the maximum top. I think the top was. I'm not trading on this exchange, but it was pretty much like real on the top. I'm still into the position. Took profits on the way down here. The price went up, and I'm expecting right now to go a little lower. So can use another trend. A trend line. Okay. So from the high to the moment that we have right now, volume area high here, volume area high low here, point of control around here. If you go by day, yeah, look at this. Look at this. So the point of control from May 3rd, the price went down and it goes up. It hits perfectly at the dot, at the level. I mean, like, how many traders they can find these levels, you know? Apparently a lot of traders like me, while probably a lot of people maybe they lost money today, or probably they didn't enter the trade because probably they were expecting to go high. Did we have, I think we had like a Fibonacci level over there, if I'm not mistaken. Um, yeah, so we were past 786, maybe most of the traders they enter at 618 or 66. or 786, and basically they depends their leverage, probably they got liquidated. I enter here and no problem. I took some profits, move my stop loss at entry. It's a winning trade for me, no stress. I enter another trade, um, long position here, so I have two positions, long and short. I'm not biased to the price going higher or lower. I'm just trading with the environment. The trade that I open it for a short position, I might keep it longer because I think the price is overextended and it needs to retrace a little bit. So Fibonacci, point of control from that level. If you do draw another one from here to here, you have a possibility that the price can come down here. Look at this. I mean, like it's no science. It hits this level here today, and it bounces up, comes back down. To me, if the prices gets hit several times, if the supports get hit several times, the chances that they still gonna be a support for a longer period of time, they're getting smaller and smaller. So to me, this level here, yeah, from the previous day, support, support, and it's kind of grinding. Probably people, they will expect, yeah, we gotta go higher, we gotta go higher. Well, not me at the moment. I'm not expecting that because the support that we do have here can go down. Of course, nothing is guaranteed in the market, but that's why you take in the risk and you calculate your risk and you know where to put your stop loss. So I'm already in a short position. There's no reason for me to enter in a short position. I'll probably compound in a short position if the price, it goes down to this level that it was before, the day before, as a point of control, goes back up, test it as a resistance, is guaranteed resistance, and it bounce down, yes, then I will enter in another position. So for the moment, this is what we have right now. Yeah, so we're still trading the range. I am not interested to long anything above 58, 5900. Just looking for a short position. I don't think the price is gonna go down to here. Well, it's possible. Why? Because the trend is still high up. Okay, so yeah, that's all that I had to do today. I hope you understand. I'm sorry I talked a lot. So to summarize, uh, first thing first, suppose resistance. The more touches at the candle close the price has, that becomes like a strong level. You don't have to draw. Start from a high time frame, from a month, week, day, hour, and work from there. Um, Look for point of controls from the day before, or 3, 4 days, or 20 days before, doesn't matter. If the price is higher and it's a price discovery, meaning like the price is going higher, just look for the Fibonacci extensions, like you have it here. You can say if the price goes past the 1, that it's the point of reversal. That means the prices can go higher and higher, and the levels you'll probably have 1.236, 1.272, 1414. No, I will not use it, but definitely 1618. So anything is possible. If you look at the formation right now with no calculations, just naked chart, this can be considered as a bull flag. Yeah, bull flag is considered if this is the flag, and this is the pole, and this is the flag of the pole. By textbook, they say it cannot go lower than 50%. So 50% will be 50 retracement Fibonacci. So if you do this to the level higher, if the price goes below this level, there is no more a bull flag. Example about a fake bull flag where everybody expected the price will go higher and higher, you can say this one. Yeah, so the price goes higher, it comes back down, it reaches, breaks the 50%, goes back higher, and everybody's calling a bull flag, well, the price goes down. So basically the price uh, invalidate what people they were thinking, while the price action tells you right away this is a breakdown formation with a lower highs. You have like the higher high here, lower high, lower high, lower high, lower high, lower high. Here you have a higher low. Yeah, lower low, lower low, lower low, lower low. What do you expect more? It's a downtrend. This is changing. Here you have point of move, the pivot, higher high, higher high, higher high. Price braces this one and breaks up, then you have a continuation, higher high, higher low, higher low, higher low. Yeah? Okay. Thank you so much, everybody. If you have any questions, let me know, and I will get back to you. If you have any requests, I'm sorry if my English is really, really bad, but you know what? I am pretty sure you understood me. Thank you so much. Bye-bye.